Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Well, folks, the cycle period, we are in the midst of it, and you can just see what is going on around the world. It is pretty nuts. Israel striking Iran's nuclear and military facilities in the overnight. The futures dumping out. S&P was down over 100 points. It has rallied back in the near term. Now, yesterday we had the 30-year bond auction. It actually went relatively well. So again, it went relatively well. That was a non-event for the markets. The markets actually ended green yesterday, but today again, right into it. And again, look at what's going on around this cycle date. You had the horrendous India plane crash. Now you have Israel striking Iran. We obviously have the protests in LA. A lot of this stuff, again, this is something about it, and amazing stuff. And I've done this for 26 years. And these cycle dates, while they don't always hit the nail on the head, there is something to them more often than not. Just like in trading charts, it's based on probability. And sure enough, we're seeing something here today. Let's get right into the charts without a delay. And again, just to be clear, we are now in the cycle period. It will last until about mid next week. But looking at the S&P, you can see very clearly that right around 8 o'clock, 8 p.m. Eastern time here in the U.S. is when those strikes began, and the futures took a nosedive, right? So again, yesterday, this was yesterday's price action. This was your PPI data that came out. The markets rallied up on that and then basically went to sleep the entire rest of the day. After hours, we were creeping down on the futures, and then that news hit and we took a nosedive. And if you look at where we closed yesterday on the futures, we closed right around 6,050 and we bottomed out overnight at 59.25. So we're talking about 125 point S&P futures dump from the close yesterday to the lows. Now, if you look at this, the markets have been digesting it. Buy the dippers have been coming in. Not super unusual, but I will say this. I do anticipate a down day, and it wouldn't shock me to see us trade down towards the end of the day. And let me just talk a little bit about that. So I look at markets from a chart perspective, which is really from a psychological perspective, right? And the reason I say psychology is so key in charting is that really when you look at an up and down candle, like a green candle or a red candle, an up move, a down move, what are you really seeing? You're seeing investors being bullish or emotionally positive, or investors being emotionally negative or bearish. And so you're really looking at human psychology when you trade charts and candlestick patterns. And so if we look at this, right, we look at this and say, okay, well, let's think outside the box here. Let's think about where things could be. And what we've heard from Israel is that this is not a one-day event. And so if you tell the market that and you tell investors that, how are they going to feel about holding into the weekend? And so with that, yes, we've rallied back decently to the point where the S&P, and by the way, look at this, guys. Look at where we were right before the PPI data and look at where we are right now. I mean, this is uncanny. We literally went right back to that level. And what we know here too, and let's just jump to a quick tech analysis point of view here, is that what we know is that this was support here, right? So support, support, and support. Then what do we know about where that line should be? It should be resistance and resistance. Isn't that crazy, folks? How this is a overnight pre-market level yesterday. This is pre-market today. Markets break support, and now it becomes resistance. Okay, but going back to my psychological point, we have to keep in mind that you now are coming into 2 days when the stock market is closed, and therefore it's going to make investors very wary to hold on to big positions. Now, listen, small positions, no big deal. But again, big positions, institutional money, it's going to be very unusual for them to buy heavily on a Friday when you have these risks out there. All right, let's flip over to the S&P. Again, we're going to look at the daily chart. Remember, the daily chart on the S&P does not show today's price action, but just be aware we are gapping down. But if we look at this, we can again see pivot high here connected to this high, right to here, and so far it's getting rejected. The other thing to keep an eye on here is we do have this little bit of a wedge pattern that as of now, and listen, we'll have to see where we close, but as of now, we are going to be trading below this wedge pattern. Upsloping wedge patterns do break. The tendency is probability-wise about 70% of the time they break to the downside. I was hypothesizing into this cycle date that maybe they pop us real quick up here, pierce the high, the all-time high to just get those last bulls on board. Maybe that doesn't happen. The cycle date is at hand, and they weren't able to get that market up. So we'll have to watch and see how this plays out into next week. But again, just amazing to kind of see the cycle and what just occurs. And again, so many people always ask me, like, what goes into the cycle? It's a lot of calculations, but it goes into GAN, WD GAN. I don't know how many of you guys have heard that in technical analysis. But really, it's a matter of looking at various multiple factors that are more psychology based and time based, and you come up with these dates that stand out. And when you've been rallying up, kind of grinding up nonstop, a cycle doesn't tell you it's going to be up or down. What tells you that most likely is the direction that the market has traded prior. So if we were falling and grinding lower into a cycle date, naturally you would say, okay, well, it's going to be a change in character or a change in direction. In this case, we've been floating up into the cycle date. You tend to go and say, okay, the downside is the most likely play here. All right, so again, we'll keep you guys posted on that. Be interesting to see what else happens here. But again, just going back to the S&P wedge pattern, let's see if we break and close below the wedge today. And again, I'll watch that. And just keep in mind is that if we don't close below the wedge, I still think there's a possibility we could get up here. And even if we do, if we don't confirm, there's always a small possibility of a move up. Here's the QQQ, the NASDAQ 100. You can see where we're trading based on this dotted line right here. And again, yesterday we opened below the wedge, but look, we closed back on the wedge. And today it's going to make another attempt to break the wedge pattern to the downside. And I've told you guys, I mean, one of the things that I've gone over many, many times in this game plan is that there's many cracks emerging, right? So for instance, we've talked about the SMH, which has led based on the semiconductors leading this rally to the upside. The SMH finally filled this massive gap right here. And you can see, again, it closed on, opened above, closed on, closed just above, but it's right in that range. It has not confirmed above. And today you're seeing the semis weaker. Now, listen, it's not a huge drop on the semis. Again, the markets are set up to open about 1% lower. It's not a huge drop, but let's watch and see how it plays out here today and also next week. Now, we're going to get into oil because oil's the big story of the day, no doubt about it. I'm going to update you guys on what I've done with my short position on oil here. And by the way, last night, late into the night, I was trading oil, day trading it, which was pretty remarkable. As again, it popped as high as 77. I got some shorts off in the overnight as day trades and was able to make some nice money there. But in fact, we'll jump into oil here. And listen, look at what I've discovered on oil, guys. This is remarkable. Absolutely fascinating. So anytime my levels kind of get breached, I go back to the drawing board. And this is one of those things that as a trader, you have to remember and you have to be humbled by, right? The market will humble you all the time. And it's one of the reasons why real traders, like real traders that are trading real money, they're not cocky. I've never met a cocky real trader, right? And the reason I say that is because as soon as you get cocky, the market punishes you. It's just the nature of the beast. Like, I've traded for 26 years. I've made a lot of money in the markets over the last 10, 15 years. My first 5 years, it was a struggle. I was really learning the ropes, losing money. My next 4 to 5 years was really break even to slightly green. And then since then, it just kind of climbs up. And remember, my path was a lot longer than my hope is that your path is. And the reason why, because a lot of you would say, oh man, 5 years of losing money, 5 years of break even to slightly positive. That doesn't sound so good. But remember, I didn't have anything to go by. I literally am self-taught in that way where there was no great trader sitting next to me teaching me. There was no winning trader series. There was no game plan. I grew up, a lot of my early trading was really pre-YouTube even. And by the way, YouTube, there's a lot of junk on there. So you want to be very, very careful. But again, the key here is that the market will humble you. You're never going to be 100%, which always has to keep you grounded and careful. Because when you get too cocky, what is our normal reaction? When you think you're not going to lose, what do? You bet the farm. And the market has a tendency to know when that happens, and then it takes the farm. And we don't want to let that happen. All right. Again, just personal experience, guys. Just personal experience. But going back to oil here, look at this. Down sloping, connect major high to major high, and look at the overnight. We got over $77, touched that line, and then look at the parallel. Perfect low to perfect low to perfect low. And so in my basically what I did this morning was I added to my swing trade short on oil, got my average up beautifully. And again, the idea here is that I think we've topped out on oil. Now, one of the things you can do here, and this is again being on data-based analysis, right? So data-based analysis shows us that when we have these periods where there's conflict in the Middle East, fear drives oil up. And then if you look historically, almost always oil comes back in. In addition, we know OPEC is increasing production. We know the US is slowing, so demand is slowing here for oil. And then we also know that the US produces a massive boatload of oil. So all of those factors, you have the fear driving oil up in the very near term. But in general, and I speak in general terms because it's probability, right? So the probability shows us that eventually oil comes in. And if we look at the chart, where does it make sense that our downside would be, right? If we take a trend line here or an arrow, so we're trading right now just below 73. Eventually, we should end up down to $54 to $53. Why? Because that's the low end of the parallel. The parallel should work as support on the downside. So in any case, listen, could I be wrong? Of course I could be wrong. I've been wrong many times before and I'll be wrong again, but probabilities is what I play the game with. And if again, 75% of the time, this is what happens, that's what I'm going to go with. And that's how I'm going to trade. I shut off my brain. Remember, I mean, that's the key is so many people right now being like, oh my gosh, oil could go to 100. I mean, remember our brains play tricks on us, right? And so you have to get control of that. But, you know, when something happens, we always jump off the proverbial cliff and say, oh my goodness, you know, oil could go to 150. We could, you know, the world could end, all of these crazy scenarios. But in reality, what is the most likely outcome? And that's again what we do here. What I teach, what I practice, what I preach, all of that stuff there. All right. So oil, again, likely put in a short-term major pivot high here off this down-sloping line. It's already reversed sizably off of that level. I think, again, you'll have a little bit of support now right at this area around 71.50. I'd be surprised if we get below 71.50 today. I wouldn't even be surprised if we push up a little back to maybe 75 going into the weekend just because of the fear of escalation. But then I would think that if there's no escalation dramatically, then Monday you could see a bigger pullback in oil. And by the way, was oil so, I mean, this is really interesting too, guys. Think about this. So the stock market was up yesterday. Investors were like, meh, you know, like no risk, nothing's going to happen. But if you looked at oil, oil was telling us something. And I think I mentioned to you guys in the game plan that we did hear that the U.S. was evacuating non-essential personnel from Bahrain, Kuwait, and a few other countries. And that was also telling us something. But if we look at this, oil was starting to inch up even 2 days ago, right here. And then boom. So again, the oil markets knew this was coming. The stock market did not, at least was not prepping for it. AKA we saw, you know, the stock market up yesterday, now down today. And again, you know, I'm not sure how much the stock market will go down because again, today, at least just speaking about today is because again, this is right now localized in the Middle East. It doesn't affect the US or US companies in a major way. But I think, again, it speaks to the potential change in character of the cycle. All right. Now, quickly looking at the dollar. Remember, the dollar is a safe haven asset. It is up today. It started to break down, but notice there's been no confirmation of the breakdown. Remember, to confirm, you have to close the next day below the low of the previous candle. Today, we're actually back to this line. So basically, at this point, this is considered a fake out in the methodology that I teach, and we're right back here. Now, if we confirm, it becomes a legit breakdown. But right now, that has not happened. Going to the 10-year is up. This is kind of interesting. Now, granted, the 10-year was down 4 days in a row, but usually when there's fear, what happens? People rush into treasuries. They buy treasuries, and that makes yields go down. Yields today are up, which is just, again, it's nothing major. It's not like we're up a lot, but it is something that I'm just paying attention to. Remember, yesterday we talked about maybe a small bounce coming in because we were at a pivot low here, just a short-term little low. This is only minor support, but we're right into there, and we are getting that little bit of a bounce. I still think overall yields will curl over in the coming weeks and go lower. Gold, let's take a look at gold real quick. Gold, of course, the classic safe haven asset. It is breaking up. Notice again, it's now right to this previous pivot right here. And again, we can see very clearly how that line goes right there. So this is your short-term resistance. If it breaks through here, we test 3,500. Again, I've been guiding you guys perfectly on this chart. We talked about, and I was actually short here, and then I re-shorted here, and then I just went to cash because this was a bullish consolidation, and then we broke above, retraced to the scene of the crime, boom, right to the upside we go. All right, silver. Now, silver obviously is not a safe haven asset as much. It had a great run about a week or week and a half ago. Since then, it's been consolidating, but this is bullish consolidation. So while I am not long silver at this point, I was short. I was long up here, but I didn't want to go short. This is where I would rebuy, and I think I said this yesterday, is silver is not something I want to short right now. It's too explosive. We talked about how it's just breaking out of the longer term trend line right here. It just broke out. So the only thing I would do on silver is if it pulls back here, I would buy it. I'm not going to pay up for it here. If it gets one dump out here, yes, I would buy it in that situation. Natural gas we'll go over. Then I'm going to go over a couple stocks. I know it's been a little bit, usually I do the stocks earlier on, but in all fairness, today, the commodities are more important than the stocks because, again, they're moving much, much more. Natural gas is not moving much, much more. It's basically just going sideways. Let's flip over back to stocks. Restoration Hardware, or RH, is up today. It's having a decent move. Nothing yet to write home about. The one level where I would consider a day trade short would be at 249 to 250. Gap fill. See the close here and the open down here. That's a big gap right there. If gap were to get filled today, I would expect a pullback off that level. And then Adobe reported earnings yesterday after the bell. The stock initially popping all the way up to 445 and then just going lower, folks. Going down, down, down at 390 now or so. If we look at this, there is a technical level coming into play. There's a key level around 383. That actually very likely could be hit today. So again, we'll keep an eye on that. But again, this would be my first gap. This is a gap fill right here. That would be a level for a potential day trade. Now, listen, overall swing trade wise, generally my portfolio is, because of the cycle date, is mostly positioned on the short side, but I've left myself lots of room, as I always do, to add if we go a little bit higher. Like in my head, when I'm saying, okay, we're coming to the cycle date, so I got to inch in on some shorts here on the market, on individual names, etc. But in my mind, I say, yeah, but they could, the markets work in mysterious ways. They could push us up and make a new all-time high before that rollover. So leave yourself some dry powder on the side. And that's what I do. And again, I always play defensively. And I play defensively, and I've said this before, but it's so important. I play defensively on all my trades because I've learned that when you don't play defensively and you go all in, oftentimes one of those is going to go wrong. And when you don't have more capital to deploy, you're literally handcuffed. You're just at the mercy of the markets. And you never want to be at the mercy of the markets. The markets, it's like being in the ocean and you have a cut and there's a great white shark circling you. Like literally that's what it's like. And so you never want to leave yourself in that position where you have no outs, no maneuverability. And so I know we all want to make a fortune by saying, all right, I'm going to put all my money in this one crypto or all this money in one stock, small cap stock, whatever it is. I did it all. I did all of that. And I can vouch that I didn't start making money consistently and good money in the markets until I actually played defensively. Defensively, actually, it kept me from losing the big ones where it would wipe out like 6 months of gains. And once you can do that and you stop wiping out like 1, 3, 6 a year of gains, now you're on the right path. All right. Now, again, You guys saw the banner at the bottom of the screen there talking about the investor, and there it is, Investor Empowerment Day. That is coming up on June 23rd. It's where we are going to teach the heck out of things. I'm going to trade live on the screen. You guys will see my account up there. It is going to be a great day, guys. So put that on your calendar for the Monday, June 23rd. It is just a week from this coming Monday. And again, I'm excited for that. It's the idea is, again, to empower you all. You guys are rock stars out there. I know each and every one of you is as smart as me, if not smarter. You guys can do everything I can do. You can get there. It just takes a little work, and I promise you can get there, all right? You guys have a great one as always. You guys, again, mean a lot to me. You guys go out of your way to spend time with me every morning, and I do appreciate each and every one of you. So thank you, and have a good rest of your day. Take care.